crypto looks good. Technology continues to look good because liquidity is still coming into the system. They've got all the debt to refinance. We've got the fiscal stimulus coming forwards. We've got, all of the right things happening. So I just think this year is a good year. We've also forgotten about what volatility means in crypto. It means upside more than downside. So when we talk about 10% move in Bitcoin, I mean, when I go back and look at the monthly percentage change, it's not uncommon to have a 40%, 50% month in Bitcoin.
Yeah.
Two of them back to back. And yet we've kind of forgotten because we've been in this bloody low vol environment the whole of last year. But when it happens, I mean, we've seen it. I mean, alts do 5x in a month when Bitcoin does 40%.
At the heart of Raoul's thesis is a simple but profound realization. The world is trapped in a cycle of debt. Because global governments have accumulated so much debt, they are forced to constantly refinance it. To do this without crashing the system, central banks must provide liquidity. Raoul points out that the GMI Daily Liquidity Composite, his proprietary measure of global money flow, has a near-perfect correlation with the Nasdaq and the Everything Code. When liquidity rises, tech stocks rise. It is a mechanical relationship. However, over the last year, something strange happened. While tech and liquidity moved up, crypto decoupled. Before we go on, just a quick reminder. Liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
If I break it down, there's the mega theme, this whole exponential age, economic singularity that we're hurtling into, the AI trade. What is this all about? So I spent a lot of time talking about that. What's the future of humans? How we do that? Julian spent a lot of time looking at the macro outlook, and the simple macro outlook is business cycle go up, commodities go up, that kind of stuff. The crypto world, this is actually a good chart. Let me show you this because this sums up all of last year. So this chart is this is the Everything Code thing with the GMI Daily Liquidity Composite and Nasdaq. It kind of worked absolutely perfectly. So the Everything Code has been working perfectly. And then you look at the same chart in crypto, it did that. It was the only thing that decoupled. And it was based really on just what happened in 1010, that government shut down, liquidity, the furthest, farthest out in the longest term assets, does this. I think the alligator's jaw's shut. You've got these beautiful charts. I mean, that's like everything excluding Bitcoin and stables. I mean, these charts are nice. Liquidity just keeps going higher, and we've still got to refinance all of these debts. So we wrote a lot about that just for crypto looks good. Technology continues to look good because liquidity is still coming into the system. They've got all the debt to refinance. We've got the fiscal stimulus coming forwards. We've got, all of the right things happening. So I just think this year is a good year. And then we've got, the structural change to what's happening with technology. So that's that. And then people who are in the more traditional world, it's like the commodity world. It's where the Aussie dollar goes up and the Canadian dollar goes up, and that typical cyclical trade that ends up with over time inflation crawling higher again, which not yet, but over time. We overlaid financial conditions, gold, and also the interest payments. And it's super interesting because it's basically gold is following current financial conditions. Gold follows current financial conditions and it leads liquidity. So this is our total liquidity in gold. So gold leads it by about 12 months. It basically lives in financial conditions world. But more importantly, here's that interest payments chart. And what's happening is gold is ahead because this is where we are in financial conditions, but we need to ease financial conditions all the way to pay for this stuff. And then liquidity, you can't see it very clearly here, is in blue, just follows the whole thing. And Bitcoin follows liquidity, although, we had that slight change. So the metals trade, I don't think it's done yet because of this. We're not there yet. So it feels like the metals trade can go till the end of the year, which means financial conditions, the whole thing just goes forward. So I still think it's longer than people imagine, but we will get some sort of rate of change and understanding later. We need to see where the ISM is as well. Has the ISM ripped high? And is it, if it's near 60, you want to be a little more cautious because Bitcoin sniffs at that peak in the ISM very quickly, along with the peak in financial conditions rate of change. But I don't think it's there yet.
Any view between them? Are you like a silver guy, gold guy in any of these, or just
No, I just think
No.
crypto plays catch up because the multiplier effect. Look, I showed you the chart. It was a dislocation in one asset only, and it's to do with what happened in October.
So what do you think happened there?
Here's my thesis.
Yeah.
Is the market's broke, fine. We've seen that before, flash crashes and stuff. But the market makers couldn't access the APIs. So who bought the stuff that was being liquidated? And my guess is the exchanges had to step in. Binance, OKX, and whoever had all of that forced deleveraging. And they had to step in because there was no market at all. And everything was automatically being liquidated. Can you imagine that happening? You're sitting in front of your screen, the market makers are shut out from making prices, yet everybody's being liquidated in a cascade. What do you do? Well, if you're Binance or whoever, you're going to have to put your balance sheet on the line.
Yeah.
And my guess is that's what happened. So they bought a whole bunch of stuff, and then they've been somebody's been acting like a program trading desk, unwinding a big trade. We've kind of seen it every day. They sell something, they sell a bunch, and that's what it looked like to me. So somebody took on an absurd amount of risk because they had to, and they've been having to work out of it in an illiquid market over time. That's right. It's not bearish. It's just that there's still the supply. Now, if you think of where the supply really comes from, it's the alts, because that was the stuff that ended up going down 80% on that price wick. So you got to work out of a big alts position that's a liquid that everybody cascade sold into. Just takes time to digest. So I think those alligator jaws close. I think that is the feature for the year, and that's why I think we also in the Global Macro Investor, we looked at the undervaluation of Bitcoin versus where it should be. It should be somewhere around 140 to 160,000 had that not have happened, if it had just followed the NASDAQ chart and the everything code chart. So we've got this discount that's happened, and then we back checked it against like 6 other different variables to see, does that discount stand true? And it does. So it's like, okay, so we've got this discount that was created by a temporary factor, not a permanent factor. You just need to give, once liquidity comes back fully into the market, I think it closes.
While Raoul is a known crypto bull, his macro view on metals is surprisingly nuanced. He observes that gold follows current financial conditions and leads liquidity by about 12 months. The reason gold has been performing well is that it is sniffing out the need for easing. To pay for the massive interest payments on global debt, the government must ease financial conditions. Gold is already pricing this in. Raoul believes the metals trade isn't done yet, but he warns to watch the ISM, Institute for Supply Management Index. If the ISM rips towards 60, it signals a peak in the rate of change for financial conditions, which is usually when you want to become more cautious.
We've also forgotten about what volatility means in crypto. It means upside more than downside. So when we talk about 10% move in Bitcoin, I mean, when I go back and look at the monthly percentage change, it's not uncommon to have a 40%, 50% month in Bitcoin.
Yeah.
Two of them back to back. And yet we've kind of forgotten, because we've been in this bloody low vol environment the whole of last year. But when it happens, I mean, we've seen it. I mean, alts do 5x in a month when Bitcoin does 40%. That's why I just don't do anything. I don't trade out of it. I just don't do anything. I just sit with it and say, it'll be the gift that keeps on giving over time. So I just sit with it. And then I don't drive myself insane. Like, oh my God, I've missed gold. What do I do? What's the next one? Shall I go to silver? It's like, I just don't do any of it. I just sit.
And are you still mainly Bitcoin and SUI?
Mainly SUI. And, I have a bit of majors and a lot of ETH because of NFTs, because that's been my biggest bet, really, is I bought a shit ton of digital art. And that's all been on ETH. And I think the ETH case is very strong going forwards over time. In the same time horizon, I'm looking at digital art, which is next 10 years. And I think digital art will become ultra valuable artifacts. If we're going from $3 trillion to $100 trillion in value in crypto, there's $97 trillion of wealth. Upstream of all wealth is always art. And so, that's my thesis, and the thesis that we talked about in a AI-driven age. These digital artifacts become extremely valuable to us humans because they're human things. If we go through this cycle, in the end, what will have done best? It'll have been crypto, just by the very nature of its convexity and its reflexivity. So I'm just more patient with that trade. The one stock that we've done that's gone really well for us, in fact, all of our stocks, we had a great year in tech stocks, but Rocket Labs, that was fantastic because it's an actual space company that's actually sending rockets into space, and it's tradable. Again, when I look back and what's had better returns, crypto's had better returns over time. It's an easier trade for me, and I know everything else sounds more intellectually interesting than just owning some crypto and doing nothing, but generally it pays off. It's a simple of when. It's just what I get to again is, what the fucking role do we have in markets when it's AI agents trading versus AI agents? It's like, don't forget, it's been that world in high frequency trading for a decade and a half, 2 decades now, where humans have no edge. You know it from the investment bank, from the sales and trading floor.
Yeah.
The traders had to move out time horizons because everybody else got replaced by the machines. And the banks couldn't compete with Jump and all of those guys, and Virtue and all of those, because they were just too powerful and too fast. So I just don't know whether we're going to have an opportunity in markets. And I think it's kind of naive to think that you or I could spin up our agent and it's going to be this master thing in markets, when agents are going to be spinning up their own agents to create money for themselves to do economic tasks. I'm like, I don't know where this is going, but what you're excited about today is the death of you tomorrow. Look, we've got to get through. This tariff thing is like, it's on, it's off, so we don't really know about that. Markets don't like this kind of stuff. Then we've also got the potential for a shutdown again at the end of the month. And I think we're going to cower in fear a little bit from that. So I don't think it's up only yet, but I do think that by sort of, once we get clarity over that shutdown, I think we also get the Clarity Act through as well. That seems to be being pushed. So towards the end of Jan, I think that's it. Then the liquidity starts flowing in from the changes to the SLR and stuff like that, i.e. the banks can now print more money. And so, yeah, everything looking forwards is pretty positive. But, we had a decent rally. I mean, stuff like Sue's up 40% in, a week and a half or so. It probably needs a bit of digestion. Markets don't really like a lot of shit going on, and people lose their minds over X. But if these things slowly resolve, these are net big positives to the general kind of structural backdrop. What seems to be happening at a bigger level is where kind of the US is sort of walking away from the rules-based global order system, which is the United Nations and the WTO and all of these things, and it's going its own path. So we're seeing this multipolar world. It's only when there's a vacuum and there's a problem. But the US is filling the vacuum with its own kind of power assertion, and that probably keeps markets comfortable because it's a relatively benign power. So you're not leaving these kind of big vacuums, I think.
Raoul Pal's message is clear. The macro backdrop is overwhelmingly positive for risk assets, specifically crypto and tech. We are currently in a period of digestion, where the market is working through temporary supply shocks and political noise. The alligator jaws are open, and history suggests they don't stay open forever. Whether it's Bitcoin catching up to its $150,000 fair value or the explosive potential of the SUI ecosystem, the goal isn't to be the smartest person in the room. It's to be the most patient. In the exponential age, the biggest risk isn't volatility. It's not being strapped into the rocket when it finally takes off.